Here's the latest on the pending home sales report and the latest from the S&P CoreLogic Case Shiller Index. For those of you who are not familiar with this index, the S&P CoreLogic Case Shiller home price indices are the leading measures of U.S. residential real estate prices, tracking changes in the value of residential real estate nationally. And the pending home sales index is a leading indicator for the housing sector. Based on pending sales of existing homes, a sale is listed as pending when the contract has been signed but the transaction has not closed, though the sale usually is finalized within 1 or 2 months of signing. Looking at these two indices gives us an insight on what has happened in the past in the case of the S&P Case Shiller Index and what in the future might look like with the pending home sales index. Let's first take a look at the Case Shiller Index. This is what they said on the most recent report. There were unexpected economic and financial twists in 2021, and the housing market experienced its fair share of surprises. Demand continued to surge and exceeded 2020 levels, while availability of for sale homes in many locales continued to decline to record levels. Consequently, the latest S&P CoreLogic Case Shiller slowed for the second consecutive month and was up 19.1% year over year, down from 19.7% increase from the prior month. It continues on to say the month-to-month index also slowed to a non-seasonally adjusted 0.84%, down from 0.97% increase in September. Nevertheless, while the monthly gains have slowed, they are still notably above the average of 0.43% decline since between 2006 and 2019, suggesting the October 2021 increase is still beating the seasonal decline typical of October. What they are saying here is that both year-to-year gains and month-to-month gains have slowed down. The slowdown is in the increase. If you follow the channel, you've probably heard me say this before. It's kind of like going 120 miles an hour and then slowing down to 115 miles an hour. Technically, you slowed down, but still going fast. And another thing is that even with this slowdown, when you compare it to the previous time frame or season, we are still above those previous numbers. So going back to my speeding analogy, we are going 120 miles an hour and then we slow down to 115 miles an hour. That 115 miles an hour is still above what our previous speed of, let's say, 90 miles an hour. Hopefully you get the picture I'm trying to paint. In this case, the index is showing a 19.1% year-over-year increase, which when compared to the prior month of 19.7%, it is indeed down. The report continues on to say, October marks the 6th consecutive month of slowing monthly gains. The peak occurred in April 2021 when the non-seasonally adjusted monthly increase jumped to 2.32%. As monthly gains continue to decelerate, so too will the rate of annual price appreciation. According to the latest CoreLogic HPI forecast, home price growth will slow to about 3% by the last quarter of 2022. However, some markets with exceptionally limited inventory and strong income growth may experience lesser declines. This part paints a better picture of what's going on. They are saying that the data is suggesting that every month for the last 6 months, we're seeing this decline, which in turn will lead to slower price appreciation. By the way, take note of the word that they use. They use decelerate, not decline. And the last part here is what I believe applies to the Bay Area and other places that are similar to the Bay Area. Price growth will be higher simply because we have limited inventory and we have a very strong pool of buyers with strong income. You know, these are places like Portland, Metro, Austin area, and again, the San Francisco Bay Area. I think where we might see a bigger slowdown is places like Arizona, Nevada, maybe even Florida, places that are more susceptible to an economic downturn. Now let's look at the pending home sales index from the National Association of Realtors. According to NAR, pending home sales slipped in November, down slightly after last month's gains. All of the 4 major U.S. regions saw month-over-month decline in contract transactions, and year-to-year activity is down as well. Of the 4 regions, only the Midwest saw an increase and the rest were all down. The index fell 2.2% to 122.4 in November. Year-over-year signings slid 2.7%. The low pending numbers are because of low housing supply as well as buyers being hesitant about high home prices. But there is no expectation of price reductions. This is according to Lawrence Yun, NAR's chief economist. A couple of other things that he mentioned are properties are still going fast. In around 18 days, properties go under contract. He also said that not only is buyer competition unrelenting, but buyers also have to contend with negative impacts of supply chain disruptions and labor shortage this year. These issues are what makes it tougher for the market. Nothing new with these statements. About the only thing really that's noteworthy is the fact that we are seeing this month-to-month slowdown. Whether this will be a prolonged slowdown which could ultimately lead to prices finally stabilizing, we just don't know for sure right now. Then now we also have this new variant that is putting a damper on the whole economy. There are a lot of places that are shutting down again, and when this happens, in housing's case, construction of new homes gets delayed. If we look at these two indices, we can clearly see what's in store for us ahead. The Case Shiller index showing prices are decelerating and the pending home sales also slowing down. So clearly, things are changing. Now, I want to emphasize this. We are decelerating, not going down. And there's no forecast out there that says prices are going down. So if you're waiting to buy a house, that is probably not a good idea because you will be hit by a triple whammy. Number one, home prices are still increasing. Number two, interest rates are also increasing, which means both of these combined makes it more expensive to buy a home. By the way, rates increasing has a more profound effect on the cost of what you pay for than price increasing. And the third one, if you're renting, is that rents are increasing at a faster pace than houses are increasing. If you're ready to buy, go out there and be aggressive. Prices are increasing. If you don't believe me, just research how much prices are at the beginning of the year and how much prices are at the end of the year in your area. If you want to know more about the Case Shiller latest report and pending sales index, I will put a link in the description below. The Case Shiller Index goes to more detail about other metro areas in their 10 and 20 city composite index. I'll also put a link in the description for the pending home sales report. Hey, thanks for watching, and do me a favor, hit the like and subscribe button. It doesn't cost you anything.